One of the things that we pride ourselves out here on the Market Day Report is not only do we tell you what the markets are doing, but we also tell you why they're doing. We kind of take you backstage and show you what's moving in these markets. And we're going to do that here in just a moment. First of all, though, let's get you those numbers from bar chart. And right now we see where the corn market is down about 1.5 cents, 3.24 3/4, and that's about where this market has traded a good part of the session. Earlier in the day, we did go all the way down to 3.23 1/4. So we're closer to the bottom end of the range than we are the top end of the range. But keep in mind that range is only about 3 1/4, 4 1/4 cents. December corn, that's the new crop. It's down 1 1/4 at 3.33 3/4. So kind of a very quiet trade here, and that's what some of the traders have commented to us about today. Now the soybeans, on the other hand, are on the higher side, with August up 1 3/4 at 906 1/2. Got all the way up to 909 1/4. And then when you take a closer look at the November soybean contract, which is the new crop, it's at $9 1/4. It's up just 1 penny. We talked earlier with one trader about the big jump in soybean meal prices in China. Well, that has related over to the soybean meal prices here in the U.S. because August is up $2.30 a ton at $293.10. And soybean oil is on the lower side, 31 cents lower at 29.49. But the wheat market has been weaker here today, and now September Chicago is down 10 3/4 cents at 5.28 3/4. September KC wheat down 10 3/4 also. It's at 4.38 3/4. September Minneapolis wheat is down 7 cents. It's at 5.08 1/4. And cotton continues to grind higher, with December now up 127 at 61.37. Brian Hoops is here with us. He's with Midwest Market Solutions. Brian, first of all, is the weight on this corn market just for the simple fact we've got a crop report that'll be coming out this afternoon, and some are expecting a decent report, or is it related to any of this weight over in the wheat market that we're seeing today?
Yeah, good morning, John. Good to talk with you again. Been a while. Corn obviously finding some pressure from this wheat market, which is kind of plunging here today. There was news that Russia's ICAR increased their wheat production estimate by 1.5 million tons, and that is kind of weighed on that market, as it means that Russia may have more export business than what they had originally thought. The corn market's struggling as there's good rains in the forecast for a good portion of the Midwest, but most of that's going to fall probably south of I-80, and there's some areas north of I-80 that really need to get some rainfall, and they're going to be shortchanged. So that's keeping us from falling too far here in this corn market. Kind of the same thing in the soybeans. We're getting support from a 10th consecutive day of a private export sale announcement, but the fact that we are kind of devoid of some rains in Minnesota and in northern Iowa is limiting the decline in this market.
What do you think here, Brian, on this soybean market? Is 950 completely out of the question now?
Well, it's not out of the question, I don't think, as far as an upside potential. But longer-term forecasts do have some better rain chances for the Midwest. I think we've got a great chance maybe to go up into that 912 area. Which was our high back in early July. That would be a real good resistance point, and then maybe 926. Both of those are key areas that this market has had a lot of resistance at in previous attempts to get up into that area. All
right. Well, Brian, we'll come back in just a moment and talk more about these markets and what your thoughts are. So we'll do that next. Stay with us right here on the Market Day Report. I mentioned earlier in the program that today is a show list day. That's when the feedlots have an opportunity to put together a list of cattle that are market ready for the packer to come by and take a look at and see what they may want to buy. So without any much direction yet for the cash cattle trade, let's look at the futures, because one trader told us earlier in the day cash could be leading these futures a little bit this week. We've got the August fats down 37 at $100.92, now down 40 on our live and instant quotes. And we've got the October down 62 now, 62 1/2 pennies at 104.50. Now, the feeder cattle market actually were higher by $1 earlier today. Now, August is down $1.02 at 141.02. The September's down $1.12 at 141.62. Weakness there. The front two contracts of the lean hogs are higher. August up 62 at 54.62. October up 77. But the December's down 27 and the February's down 62. Maybe spread trading here. Let's ask. Well, let's just ask Brian Hoops what he thinks here. What about this hog complex?
Yeah, you know, you look at that hog market, we're seeing quite a bit of spread trade in the front months, August, October, gaining over all the other months. The index has been moving a little firmer here, and the cash trade has been a recipient of that. So that index is following what the cash is doing, and we've seemingly caught a bid. We're seeing some short covering out of some of these traders who've been pressing the short side. Now they're starting to cover some shorts. So we've had a rally in the August contract since the end of June. We've come nearly $8 off of our lows.
So do you think that there's still headroom in this hog complex then?
I think there is some upside potential yet. You know, we have a lot of supply, so we can't expect to see a huge bull market coming out of this market. But I think it's reasonable to see another $4 move out of the August contract to the upside. October really hasn't done much of anything except some short covering as well. But the rally's only been $4 or $5 at this point. I'd like to see it get into at least the mid-50s or low 60s before we would see a lot of hedging coming into that marketplace.
Final question then. Could cash be leading the futures in the cattle?
Well, yeah, it usually has been. You know, the cash in the futures here are kind of divorced itself. Cash around that $96 mark. August live cattle right around 101. That's a $5 premium. That's a pretty rich basis. Now, first delivery against that August contract's in a couple weeks. So I think they do converge here in that next 2 weeks' time. Maybe the futures come down a little bit, the cash comes up. Otherwise, we're going to have a lot of deliveries in 2 weeks in that August contract.
That is a very good point, Brian. Hey, we really appreciate it. Thanks a lot. There is the latest. Christina, back to you, ma'am.